There are not many places where you can get true passive income, where you can just park your money and forget about it, do something else and check once in a while to see how they grow over time. In this video, I'm going to give you the basics of dividend investing and explain how you can use it in order to supplement your income and grow your wealth through dividends. Before we go into the details, I would like to point out three things here. First, you have to understand that it's not a get-rich-quick scheme or anything like that. This is a long-term growth of your money. You're not gonna get rich overnight with dividend stocks, but it's a way that people have been able to earn passive income for decades. Second, you don't need to have a lot of money to start with. When I started, I literally went with only $100 and have built it up over time. And third and last one is that please push the like button below, subscribe to the channel if you want to see more ways to grow your wealth in future videos, and please share this video to everyone who you believe is interested in wealth management. Oh, one more thing. There's a quick disclaimer I would like to get out of the way. I am not a financial advisor and this is not financial advice. You should always do your own research before investing. Okay, now let's jump right into it. Okay, let's start with what is a dividend. So essentially, it's a payment that the company is going to give you for owning that company's stock. The best way to think about it's almost like a little bonus or a cash payment that it's going to give to investors as a reward. So if we take Coca-Cola for example, it pays an annual dividend of 3.13%. That means that for every $100 you invest in Coke, you get $3.13 back every year. Of course, not all companies pay dividends. If you look at Google or Facebook or Netflix for example, they don't pay dividends at all. They make a lot of revenue because they are massive companies, but they actually take a lot of that profit and reinvest it back into their company. Here you can find mostly tech companies and startups. The reason for this is that they believe this money is better to be used in places like research and development for example, so they can grow their business faster and hopefully grow their stock faster. On the other hand, dividend stocks are generally more well-established businesses. You'll see them as blue-chip stocks companies. They probably have been around for quite some time, but like to pay out dividends in order to attract new investors, but also give existing investors more reasons to stick around. Because if you have an investment and you don't have a direct means of making money from it, where the share price is going up in value, if it was just sitting there flat, you would probably sell that stock. But if you're able to consistently earn dividends from it, a lot of people will hang on to that stock because it's a means of deriving income from your investments. As far as how often you should expect your dividend payments, well, most companies out there are paying dividends on a quarterly basis. However, you do come across some special cases once in a while that pay annual dividends or dividends twice a year, or even there are some monthly dividend paying stocks. So most of the time it's 4 times per year or once per quarter. So let's now see what you should have in mind when you try to choose which dividend stocks you should buy. The first thing you need to check is something called the dividend yield. This metric is displayed as a percentage and it's basically the financial ratio that shows how much the company pays out in dividends each year relative to its stock price. So here for example you have Pepsi, which is at $144 per share for this particular stock. That means if you have $144 of your money invested into Pepsi, you should be earning about 2.9% as a dividend payment from that company. So about $4.15 in the course of a year as cash paid to you on a quarterly basis. Split this amount over 4 different quarters and every 3 months you'd be getting 1/4 of this $4. This might not seem like a lot of money. I mean, what can you even buy with $4? But the key here is that you are building this up over time. If you had 10 shares of Pepsi or even 100 shares, you could be making hundreds of dollars per year in dividend payments. Now, the biggest misconception of dividend stocks is that a high yield is always a good thing. Many dividend investors simply choose a collection of the highest dividend paying stocks and hope for the best. But this is not always a good idea. There are many examples of stocks that had high dividend yields to attract investors, but actually if you see the actual price of the stock, it decreased through time. Don't forget that the dividend yield is the amount of money a company pays shareholders for owning a share of its stock divided by its current stock price. That means that if the stock price falls, the money you get falls as well. So don't pick your dividend stock based only on that metric. Another financial metric that you're gonna want to be aware of is the payout ratio. This is a very important financial metric that you want to consider when looking at dividend stocks. The payout ratio is the company's dividends as a percentage of its earnings. So if you're seeing this number quite high, this could be somewhat of a red flag, showing that maybe companies with high dividend payout ratios may have trouble maintaining their dividends over the long term. The other thing you should know about are the payment date and the ex-dividend date. So the payment date is pretty self-explanatory. This is the actual day that you're going to see the dividend credited to your brokerage account. Now, the ex-dividend date is simply the date that you have to own the shares in order to receive the upcoming dividend. So if you buy the stock one day before the ex-dividend date, that means you're going to receive that dividend. However, if you buy the shares of that stock on the actual ex-dividend date or after it, you're not going to receive the dividend. It would actually be the person that sold you that stock who would receive the payment instead. So if you're looking around at dividend stocks, make sure you're able to buy shares before that day. That way, you will be able to receive that first quarterly dividend. The last thing you want to check out is dividend history. You want to see that A, there is a consistency in the company's dividend payments, in other words, that they pay their dividends to their investors every year, and second, there is a dividend growth over time. In the case of Pepsi, as you can see, the company has not missed a single dividend payment since 2001, and the dividend amount has increased from 0.43 to 4.15 for 2021. In any case, the full picture you can get by analyzing historical data can be very helpful for future investments. Of course, there are cases where companies might have to cut their dividends due to special circumstances. Take Disney, for example. Due to the pandemic, in May 2020, the company announced that it would not be paying the semi-annual cash dividends for the first half of 2020. And in November, management decided not to pay a dividend for the second half of this year either. That does not mean that it won't bring it back anytime soon, but it's something you should definitely know before you decide to buy Disney stock for dividend investing. So, if you personally don't feel that you want to invest in individual companies or go through the process of analyzing a company, there are other options out there, such as choosing to invest into something like an index fund or ETFs that can essentially track certain types of dividend stocks. So a good example of this would be something like a Vanguard High Yield Dividend ETF, which I believe the yield on this is about 2.9%. Vanguard essentially sets up those ETFs or these exchange-traded funds that will sort of capture many different dividend stocks within their portfolio. So if you don't want to invest into one company or just a couple of different companies, you should consider putting some money into an index fund or an ETF. That gives you a nice basket of different stocks that you can get into without having too much experience in the stock market. So how much money can we actually make with dividend investing? Let's say that you're earning 3% annually from your dividend payments. Now, if you're starting with $100 like myself, over the course of a year, your dividend payments you might get is about $3. That might be not much, but if you build it over time and have, let's say, $100,000, well, 3% annually would be about $3,000, which I believe is about $250 in passive income every month. And that is a lot of money for doing absolutely nothing. What I personally do is reinvesting the dividends that I get from these companies back into these companies, and I think that this is really the key for success in the long term. Instead of taking those dividend payments and spending them on your mortgage or spending them on car payments, actually just reinvesting them back into various other companies or other different types of investments, you can build wealth over the long term. Dividend investing passive income, it's definitely a long-term game. It's not something you can jump into and get out of in a couple of weeks and make a lot of money. So anyway guys, that's gonna wrap up this video. A small introduction to dividend investing. I hope you enjoyed it, and if you did get value from this video, like I said, a thumbs up would be great. Also, leave me a comment down below with your favorite dividend stock, or if you're currently investing, let me know how is that going for you. But anyway, thank you so much for watching guys. Subscribe and hit that bell for future notification, and I hope I see you in the next one. Bye.